Hello everyone. It's currently 1:12 p.m. in Kyiv, August 1st, the start of the last month of summer. Bitcoin is trading at $63,014. And right now we're making a very detailed, high quality and rather lengthy review for my private Telegram channel. So get ready, make yourselves comfortable because it's really going to be long. There's a lot of information. So we're going to analyze 8 Bitcoin charts, and maybe we'll also touch on and talk about the stock market, the S&P 500 and the Nasdaq. Well, let's start with Bitcoin. The main defining trend time frame for us is the daily chart. Let me open it up now and we'll talk about it first. Yes, there are a lot of different lines, levels and so on here. Look, there was some kind of drop here. The cursor highlights all of this, and here was the turning point. This point is marked by a black level. Here it is, $62,909. Notice that yesterday's daily candle did 3 things. First, it closed with a bearish engulfing of 3 days of growth, each of which had a higher high and a higher low. It closed below the 50-day moving average, and it closed below the level of $62,909. This suggests a continuation of the decline, and here we have a absolutely clearly bearish direction with the nearest technical target. Here is the point from which, let's say, the growth started, $62,290. Here is the level. You can see it is drawn based on the opening point of the candle from July 9th of this year. Everything is clear here, right? So the daily candles indicate a decline, plus we already have some oversold conditions, but it's not strong, and we haven't entered the zone of strong oversold yet. And the overbought oversold indicator itself is showing negative dynamics and also points to a decline, just like the candlestick structure. So everything I've said before, breaking through important support, breaking through the 50-day moving average, a bearish engulfing of 3 days of growth, all point downward. Could there be some kind of rebound? Yes, there could be. It might go up to around the same 50-day moving average to test it with a shadow. That's $63,400, and we might even see that this very weekend. That's it, that's all. Based on the daily candles, we've simply determined that we're in a downtrend. The nearest target is $62,290. If we break through it, then the next target is the opening point of the candle from July 3rd, which is $61,500, then somewhere around $60,000, and then further down $58,000. But with a high probability, if we get here, we'll also update the minimum. That's it, we're done with the daily candles. Here it's clear that we're working from the short side, despite the already moderate oversold condition. It's not severe, but it is present. Now we'll move on to a higher time frame. Weekly candles, here they are in the upper right corner. We'll expand them to full screen and see what's here. The situation here is also bad, at least for now, with 1 day and 14 hours left until the weekly candle closes. We'll draw conclusions when this candle closes completely. But what do we have? 3 weeks of growth. Well, actually 4, but we're taking the last 3 weeks of growth, right? And the current week is engulfing by the bodies of these candles, all this growth and risks closing below the 200-week moving average, which indicates a potential decline to where right into the area of this purple or red rectangle. Why? Because on the one hand, this is the starting point of the growth, and we might retest it. That's 59,577. On the other hand, this is our point of some kind of local reversal right here. But still, these are weekly candles, and even local reversals matter here. That's $61,483. So this level, yes, it's not exactly perfect, but look, here the candle tests it with its wick, here with the wick, here with the wick, and then bounces off, right? Here we broke through it from above with 2 wicks, tested it, and then moved up, right? So this level does matter, and we could very well bounce down to it if we close the week in the red. That's it. So, the weekly candles suggest a decline, while the overbought oversold indicator allows for both growth and a drop. That's all. And here the target is about the same as on the daily candles. Around $61,500, $59,500, somewhere around there. Now let's take a look. Yes, and at the same time, look, we have a growth target in the area of $75,500 to $73,000. We keep that in mind and we'll come back to it. Now let's look at the monthly candles. What do we have on the monthly candles? On the monthly candles, we have a picture In the previous take, I drew these, but now I'll erase everything and draw it again. On the monthly candles, we have a structure that I marked as a 5-wave decline. You probably know that there is Elliott wave analysis of charts, right, which was actually invented by Elliott. It assumes that when there is a downward wave, well, a downward cycle, yes, it goes through, well, or an upward cycle in 5 waves. The first wave is a decline, the second is a correction, the third is the longest decline, the fourth is a correction, the fifth is a decline, right? Well, growth happens in the same way, right? That is a wave of growth, a wave of correction. The third wave is the longest, according to his analysis. It's a wave of growth, then comes a correction, and then the fifth wave of growth, right? This is considered a completed cycle. That's it, I'll delete this. So, within this logic, it's absolutely clear that the decline, which started in October and ended in February with a minimum of $60,000, falls under the criteria of the first wave. Then there were 3 months of growth. We are quite justified in considering this as a correction. And what happens next? Next comes the third wave of decline, the fourth is a correction, and the fifth is another decline. Well, that's just an assumption. I'm not an expert in wave analysis, but let's first take a look at how much we've dropped. By 52%. According to Elliott wave analysis, the third wave is the longest, whether it's in growth or in decline. So, if my assumptions and logic are correct, we should fall by at least 53%. That is just a bit more. Well, here we have 52.46. Look, where do we have exactly the same percentages? That comes out to a price of $39,000 approximately, right? That is a drop from the maximum that was reached in May of this year, down to $43,500. And that's the minimum. And now I'll remove this thing so it doesn't block our chart. And this is the zone of the pink mathematical target for the decline, is the zone of the 100-month moving average, and it's just below the base of the growth candle, right? From, I believe, February 2024. Take note. So here's the support level. Here it was, yes, 58,740, and it was broken in June. By doing so, we indicated that the trend is pointing downward. And now let's analyze the monthly candles. But is growth possible, say, up to 70,000 or any kind of growth at all? After all, according to Elliott, we're saying that we're falling, right? So how can there be any growth here? In theory, we should be going further down. But look, we have a bullish candle in July, right? But growth doesn't necessarily mean that all the candles are red in a row, right? Here, I'm showing you growth. Look. So, a decline doesn't necessarily mean that all the candles are red. There can also be green ones. Look, during the decline, there are 2 green candles. They even updated the high of this red candle. And then there's another drop, 1 little green candle, and then further down, right? And the green one didn't update the high, right? The red candle updated the high of the green one, but then we continued downward. So it's not forbidden to have some green months of growth during the third wave. That's not a contradiction. There's nothing wrong with that, right? So let's think this through together. We have a very strong oversold condition on the monthly candles. And if I zoom out the chart again, look, here on the daily, there's already moderate oversold conditions on the 12-hour, on the 4-hour charts as well. Well, not on the weekly, but there is a growth target in the area of $70,000 to $73,000. What does this mean? It means that the 4-hour, 12-hour, daily, and weekly time frames. But if we open, so these, no, forget the weekly, no. So these 3 time frames, 4-hour, 12-hour, and daily, they indicate a decline, but not a very deep one because they're already in a fairly oversold state. At the same time, if I switch the daily time frame to the 3-day time frame, you'll see that the 3-day candles are in an overbought state and suggest a decline. A decline to where? Well, here is the target for the decline according to the 3-day candles. Here is the point right here, the point of some temporary pause. It's $62,290. We will see this level with an extremely high probability and most likely in the very near future. That is, in a day, 2, 3, or 4. So if not this weekend, then next week. That's it. And then our next technical level for a decline is the opening point of this candle, which is $61,500. And after that, it goes even lower, 60,000 and so on. So the 3-day candles clearly indicate a decline. The 4-hour, 12-hour and daily candles also point to a decline, but they are already in an oversold state, though not extremely overheated. This means that as soon as the 3-day candles enter this green zone, the daily, 4-hour, and 12-hour candles will be extremely oversold. Even the 3-day candles could come here into the central zone. They don't necessarily have to go all the way into the oversold area. And this suggests that afterwards we could see growth, with the growth target being reached on the weekly candles around $70,000. And now let's go back to the monthly candles. I'll explain to you how this can happen and how this growth does not contradict a drop to the area of, let's say, 41,000 or 39,000. Look, in June, we broke through the 50-month moving average. We broke the support at 58,740, but in July, we once again consolidated above all of that, right? And this happened even after setting a new yearly low, and in fact, this suggests growth. Local growth, growth with a new high. Why? Well, because we broke out above all the resistances again, right? A green candle, everything is fine. That is, buyers in July were stronger than sellers. But in order to talk about a full-fledged reversal, we need to see this huge June bearish candle get completely engulfed. But according to the 3-wave analysis, or rather, according to Elliott's 5-wave model, it is assumed that we are currently in the 3rd wave of decline, which should take us somewhere around $40,000. So how can there be growth? Or where is this growth supposed to go? It's actually very simple. This growth fits into the scenario of testing either the opening point of the June candle, which is 73,700, 73,500, basically what we have as the growth target on the weekly candles, or we pay attention to the zone where Bitcoin spent 1, 2, 3, 4, 5, 6, 7, 8 months in a very volatile sideways range between the levels of 58,740, no candle closed below that, and $71,280, no candle closed above that. We spent almost a year fluctuating within this range. So why shouldn't we test this super important level of $71,280 now, right? From below after we broke through it. Yes, we already tested it, but not very clearly, because there was a close above it here, a new high, and for 2 months we were even above it. But we can make another attempt. Here we made such attempts for 8 months. In the end, it was successful and growth began. So if Bitcoin rises up here to 71,400 or here to the opening point of the June candle, it won't contradict the analysis or the proposed Elliott model suggesting a decline to the area of $40,000. Well, I'll round it off a bit. So yes, we can test important levels here and then continue downward. We'll work out the growth target on the weekly time frame. Well, let me just turn on the weekly chart here for a second. This is the target. That is this turquoise rectangle. Here it is. Here we have a gray untraded zone, which we haven't entered either. This is its midpoint. That's $69,000. So everything is fine. But right now, a decline is forming. So what should we do? Let's go back to the monthly candles. And here it's very clear where this decline could go. Because right now, a decline is the priority. This decline does not contradict the growth, which in turn does not contradict a deeper drop. It could reach the area of the 50-month moving average, the area around the middle of the green July candle, which is approximately at the $60,800 level. Yes, we could go even lower. For example, we could test 58,740 again, which is the opening point of the July candle. But it would make more sense, yes, to go somewhere around 61,000, 6,500, and from this area see a continuation of growth, reaching the target on the weekly time frame, and then go down to around $40,000, which is indicated by the overheated stock market. There is another option. We could also, just like we did here, look, we had this kind of movement. We can do the same thing here. That is like this, like this, like this, like this. And we could stay here for who knows how long. Anything is possible, but for now, this is my scenario. And if we switch to the daily time frame, let's try it here, though this is the 3-day chart. Let's switch back to daily candles, expand it to full screen, and let's try to reflect it here. First of all, what is our nearest support level? $62,290. But that's not serious. We will almost certainly see this level. But a bit further, we have a reversal point here at $60,800. And this point fits very clearly with what we just said, 60,500, 61,000. So I would draw the scenario or the trajectory of Bitcoin's movement as follows. That is from right here. Okay, something here is complicated. Hold on. I want to make a proper curve. Here's a curve, right? So starting from this point right here, well, allowing for a bit of a margin of error, we'll head over in this direction. Then we'll gradually move along to somewhere around this area, reaching approximately 70,000, right? But we'll do it like this. That's the kind of scenario I would draw. And then from this point we go, well, somewhere. No, actually we should go lower. So let's take, well, about 40,000, right? That is maybe with a slight move higher. So let's consider this as the base scenario. Let's draw it in a brighter color. Well, black is probably more contrasting on white, so I'll make it black. That's it. So this is the scenario that I see here and now. Maybe I'm wrong, but I've explained to you, well, basically what it's based on. Now that we've drawn out this scenario and it will be hanging here, I'll even put a mark here. So let's say this. Well, let it be like this, $40,000. Just let's make it black and make it dashed so it's clear that they're related to each other right there. 4,700, 4,500, 39. It doesn't matter. Now let's look at the more local situation. And here we'll look at the 4-hour candles. On the 4-hour chart, we can see that all the moving averages have been broken downward. At the same time, the growth targets were reached. There were 2 of them, and from those targets we moved downward. This is a sign of a weak or downtrend when we reach the growth target but don't go further, and the decline continues. Look here, we have the pink one, or maybe orange-yellow, right? The downside targets were reached, but the price went on to update the minimum. This is a sign of a downtrend. And here we reached the target, but it looks like the price will continue to go down. At the very least, this candle here, this huge one, indicates that. But technically, what kind of movement is suggested here? Well, let's draw it here as well, right here, to test the 200 period moving average. Well, this blue one is our 300 period moving average, but it's rarely used, so I would say, to test the 200 period moving average. You just need to do it a little bit like this. And then go somewhere around here, like this, right? Well, that's how I would draw it. So let's create this scenario here. That is testing this moving average line and then moving into the area of, say, 61,000, 65,000, 67,000. And here we'll also make a mark like this so we can check our assumptions later. There. The situation changes every day. I'm talking about how I see it here and now. All right, we've figured this out as well. So the expectation is growth somewhere to the area of $63,500. Now let's look at the hourly candles. Look, there's strong overbought conditions here, which suggests a decline. I emphasize, it doesn't mean it will happen, but it suggests it. So yes, it's possible. But at the same time, if we look at the hourly candles, we'll see that we have a strong mathematical target for growth. Here's the turquoise rectangle with the lower boundary at $63,230 and the upper at $63,370. There's a higher target in the area of $64,000. But given that we already have strong overbought conditions here, well, moderate but close to strong, yet at the same time we also have a target and it's nearby, I would suggest a movement where we go somewhere up here and then move. Let's do it like this, and then move down together with the 4-hour candles. The 4-hour candles indicate 63,500. Well, let's go ahead and mark out that 63,500. But let's first note that we still plan to move towards the 6,500 area afterwards. So I would do it something like this. Here I'll draw a dashed line that's 63,500, and here I'll put, well, roughly 6,500, right? Well, you could put it a little higher, right? Because it could go even higher. There you go. And that's it. In my opinion, everything looks pretty consistent. So with such growth, the hourly candles will become even more overbought. The 4-hour candles will complete the test of the moving average, but judging by the candle structure, by the consolidation below all the averages, and by the bearish engulfing patterns, they also suggest a downward movement. We're downwards. We've already looked at that across a whole bunch of related time frames, on the monthly, weekly candles, and so on. Here, on the weekly chart, our target zone is marked. That's, well, it actually turns out to be 59,500, 61,480. That's all. For now, everything is more or less clear. Now, let's take a quick look at the stock market. The S&P 500 index. Well, here it also makes sense to look at the higher time frames. Let's start with the monthly candles. Look, we have strong overbought conditions. Let's see now. July, here it is, closed with a red candle, but this candle is actually a sideways candle, meaning sideways movement. Yes, it's red, but it didn't set a new low and it didn't set a new high. This suggests that it's premature even despite these downside targets on the monthly time frame in the area of 6,000 points, around 5,150, which we reached with the candle's wick. Well, we have targets, you see, even 4,000, 4,300, 4,400. It's too early to talk about a decline. So this is a flat market. Moreover, this flat phase even allows for, and it would actually be good if it updated the historical high, because then we would get a clearer picture to the downside. Right now, the picture is blurry. There's no bearish engulfing. In July, there was no new low, no new high. It's just a sideways movement. Yes, well, these are monthly candles. It seems kind of wide-ranging, but in reality, it's not even that volatile. That's it. So, there is no clear indication of a downward move here. Yes, the June candle hinted at it, but the July candle suggests that it's quite possible we could remain in this sideways range for more than just 1 month. Now let's look at the weekly candles. What do we see on the weekly candles? On the weekly candles of the S&P 500 index, we see that this week closed in green after updating the low, right? And the strength of the buyers is clearly evident here, indicating that most likely the movement will go higher. At the same time, pay attention here. Let me do this. I'll circle it. There is a whole group of downside targets. And this means that we should go below this low when these targets start to be worked out. This low that we had this week is not a fulfillment of those targets. It's just random movement. But at the same time, the situation is already close to an oversold state. There's a green candle, which in general probably still suggests growth. And I would even say it would be good if we updated the historical high on the index. And also notice that we would get a bullish engulfing pattern this week. Yes, the stock market is already closed, but the week isn't over yet in terms of the calendar. That's it. And this in turn means that with the current bullish trend of the stock market on the weekly candles, well, that's the only way we should interpret it. We can assume that Bitcoin most likely won't go down significantly. And therefore, regarding the current price around $63,000, it's unlikely that we'll drop below 60,000. Most likely it will be exactly the range I mentioned, around 60,500, 61,000, 61,500. But the update of the current minimum, the one that's set right now, is very likely to happen. The 3-day candles point to this. Yes, they're non-standard, but we have to take everything into account. So in fact, growth is expected here, right? The monthly candles are uncertain, but the weekly candles indicate growth. At the same time, there are plenty of signals pointing downward, indicating that sooner or later we will end up below the level of, say, 7,250 points and potentially much lower. That's it. Let's look at the daily candles. Take a look at what we have on the daily candles. The situation on the daily candles is similar. That is, we have a bullish engulfing, a close above the 50-day moving average, and positive momentum in the PPO. This suggests that most likely we will either approach or even update the all-time high on the S&P 500 index. But overall, the situation is already not good. First and foremost, from the perspective of the monthly and weekly candles. Why? Because on the weekly candles, as we saw, there are a lot of signals indicating a decline and they will play out. Well, the statistics support this. And secondly, on top of everything else, there's the situation in the Persian Gulf, fuel shortages, rising energy prices. As a result, it's harder for companies to make a profit because the cost of goods, logistics, and everything else is rising. So all of this has a cumulative effect. That is, even if you were to detonate a nuclear bomb in the Persian Gulf today, the global economy would still continue for several more months on existing logistical cycles. Tankers that set out today will only reach the oil refineries in 2, 3, or 4 weeks, and then another month later, that fuel will reach the gas stations and so on. So you would need 3, 4, 5, or even 6 months for the effect of a bomb detonated in the Persian Gulf to reach the real economy. That's why the war that Trump started will definitely affect the situation in the world, the situation in the real economy. It is already having an impact. But truly large-scale destruction will of course begin with a time delay. But here and now, the stock market is expecting growth. We have looked at this together. The 4-hour candles, yes, are overbought, but that's too weak a time frame, too short for the stock market. On this note, I suggest we wrap up since the review has turned out quite long already. If you're not in the channel yet, join it. If you want to share this analysis and review with your friends, you can do that too. I have nothing against it. In fact, I can't even influence it. Subscribe to the channel. All the best.